All right, so welcome back in. Today we're going to dive into DeFi, maybe take a look at understanding how DeFi is working for the masses and how all of that may play into the future of crypto. And this is going to be our deep dive today. My name is Paul Barron. Welcome back to TechPath. Of course, joining me today is Mr. Ben Samaroo, who is the CEO over at a company called Wonderfi, which is one of course, Kevin O'Leary's involved in it. You guys got a lot going, obviously, within the crypto space in general. Ben, welcome to the show. We appreciate you jumping in.
Great to be here, Paul.
All right, so let's get into a little bit about Wonderfi for some people who may not necessarily understand the complete mission of what you guys are trying to do. For the average, say, investor, or maybe someone who's been in crypto for a while, give me kind of the rundown on where you guys are right now.
Absolutely. So the mission, just at a high level, really is bringing compliant crypto to the masses. So we have several brands under Wonderfi, including Wonderfi itself. We have a brand and a business called BitBuy and another called Coinberry. All of these are compliant, regulated platforms that allow people to access crypto and other digital assets in a simple and compliant, regulated way. And we see that as the direction that not only users, but also investors are moving in terms of wanting access to these regulated and compliant investments and products.
Your situation's a little bit different, obviously being in Canada, where you guys do have a spot ETF available. There seems to be a little bit more regulatory guidance there. Do you think being in Canada has given you guys at least a baseline for being able to create the products that you've been able to build so far?
I think Canada's been helpful for sure. There's pros and cons about the regulators here. If you look back, even going back to 2017, Canada was one of the first places in the world to regulate a Bitcoin investment fund. They were in terms of the capital market side, they were the first country to have an exchange that listed a crypto company, which was Mike Novogratz firm Galaxy Digital.
Yeah.
And so, Canada has been, I would say, pretty forward-looking in terms of regulation. I think the critics would say that sometimes there's over-regulation and they get too prescriptive in terms of how they get involved. But I would say, in general, certainly positive, and it does allow us to offer our products and really move the business forward in a way that gives a lot of certainty to us as operators, to our stakeholders, and then also to users, which is what it all really comes back to.
Yeah, for sure. I want to get into some of the nuts and bolts of how Wonderfi works, some of the mechanics of it itself. I have some questions just in the general aspect of it. In the sign-up process, it is a Chrome or browser-based app. Is there a plan to move into a mobile app for Wonderfi itself?
Yeah, we'll be releasing a mobile app as well, and then I guess just to sort of make the distinction, and we're undergoing a couple of branding changes right now. Wonderfi, being the parent company, owns and operates again a few of these different brands. When we talk about Wonderfi as a product, that's the non-custodial DeFi product, which you're referring to, and
yeah,
that's the thing that we brought to market first earlier this year, and really focuses around trying to simplify everything that's out there in decentralized finance. I think there's so much potential for democratizing access to finance and allowing people to bank without a bank, and we see a lot of hurdles. I mean, Paul, you've been in the technology industry for many years, and I think we could share the sentiment that when there's new innovation, I think it often starts with people within sort of the industry with a lot of expertise that are building the products and sort of catering to that specific demographic. And I think if you don't move past that and move beyond that, it makes it really difficult for the next wave of users to come in. So I think we're still there with DeFi, where the products are really being catered towards engineers, early crypto adopters, crypto traders, and it really estranges people that could benefit from using these products.
This is the argument I make a lot around DeFi, and in essence, all of crypto. When you look at the pressures that have been placed on DeFi over the past few months, obviously with Terra, what we saw with Luna, the whole ecosystem itself, because it's kind of drinking their own Kool-Aid, they're so close to what's happening, so they can respond so quickly, which is why you see these sudden implosions. If you had a much broader market that had more traditional investors in it, like you're talking about, you don't see those knee-jerk reactions because they're not as clearly close to it. Plus, they're not trading it like a day trader kind of thing. They're looking at more long-term scenarios to it. We would probably have had a completely different, market position overall had we had more traditional investors moving into DeFi versus what we have right now, which is, like you said, just very, very microcosm of people. So I would agree with you there.
I couldn't agree more, and that's actually the point that I usually focus on around getting more mainstream investors and users into the space is that in a lot of cases with crypto, digital assets, DeFi, whatever it is, the purpose behind this technology really is to serve the unbanked, allow people to access some of these services which historically they've been cut out of, or they continue to be. And that's not just in the developing country, that's even in places like the US, where in major cities you have sometimes between 10 and 20% of the people, residents without access to credit. And so there's these real use cases that are super important, and I think they get lost with a lot of the hype that comes around investing and making big returns and things like that. And that's the fault of the community and the people within it, because it sort of creates that effect. But the point that you made, I haven't really drawn that connection before, but I think it's absolutely right. Another benefit of bringing in the mainstream would be that sort of protection, or a bit of a different outcome for some of these situations that we're seeing in the news recently. So yeah, totally agree with you there.
Yeah, we obviously, because we research crypto so much here within our own studio, it's just a constant, churn of data and information and flow and analysis, and you get so drawn into that. It's just like you're getting too close to the sun, man. The gravity just brings you right in. So sometimes you can lose your way. I want to get into a couple of things here. All right, so token selection, the amount of tokens that are available within the Wonderfi platform itself. What is the strategy there? What is your plan going forward? Are you planning to really open it up, or is it going to be a very select few of tokens to be available there?
So the approach in general really is to provide users with safe and compliant regulated access to these assets. And so we've decided as a company and strategically to be more focused in terms of the assets that we offer. And it really comes down to factors like, are these technologies tried and tested? What does liquidity look like? What does the market cap look like?
Right.
Are there risks of these tokens and assets being controlled by a small group of people, which you sort of alluded to earlier. And really what we're trying to avoid is getting a new user, which is really our target, a new user being somebody that's new to crypto, that has read about crypto, is interested, they're sort of on the fence, and then they see a product like Wonderfi or BitBuy or Coinberry, and they're able to sort of make that first jump into into buying their first asset. And so what we don't want to do is be providing those people with access to an asset that's ultra speculative. Obviously, everything within crypto is speculative to a certain extent, but really trying to curate that with things that are the most stable and well established within the industry. And then we also offer products like indexes, which I think are really useful within the crypto and DeFi space, where you can buy a market cap weighted index of everything within DeFi. So your exposure is broadened just in the way that it would be with with an ETF in the equities markets.
Yeah, I think, well, to your point is that when you're dealing with investors who are not necessarily all in on crypto, obviously maybe it's their first time in jumping into something like that. They've heard about DeFi, they've started to research it from a baseline side of things, so they understand the benefits of it. And to the most part, they understand risk, because I think risk has been kind of baked into the market now. People understand now the market is highly volatile, highly risky. Even though I could argue that now with the S&P 500 and a lot of tech stocks and innovation stocks that we've seen some pretty dire market corrections overall. With that being the case, I would agree with you is that having tokens really kind of from a framework of safety, security, and especially around the regulatory side of things would be good. Do you think we'll lean into scenarios like what we saw with Crypto.com where they delisted tokens and I think Doge came off and a handful of others? Do you think exchanges will start to lighten the load a little bit on their overall token strategy going forward?
I would say yes, even with products and exchanges like ours where we're incredibly selective. We haven't had a situation where we've had to delist anything yet, but I think as we can see, things can come up that I wouldn't say nobody could predict, but that
Right.
The vast majority of people wouldn't have noticed or be able to sort of suss out because of how the project or the token's being operated. So I
Yeah.
think you will start to see that in your case by case scenarios, and then I think with some of the exchanges that are that have very broad offerings of tokens, they are going to have to uh, cull down those lists, and that pressure is really coming from regulators. So the regulators in Canada, for example, have forced all of the licensed exchanges and platforms in the country to delist XRP, and that's been a big push from the Canadian regulator. And so, depending on where the platform's located, where they're operating, and what users they're serving, I think you're definitely going to see a more stringent look at tokens from regulators, which will then inform what products are listed on these platforms and exchanges.
Yeah, which is I mean, you hear Gensler talk about this all the time. I feel like he's already starting to set his course on how, in likelihood, this is something we've talked about on the show before, we may see an exchange actually see a call from the SEC before the year end about selling unregulated securities. So all of that definitely, I think that's the concern I have with, and at the same time, it's concern, but yet also it's a good thing that we start to move down this path because this is eventually going to be the future. So we have to get our ducks in order. It's just a process that I think the industry is going to have to go through. All right, so I want to thank our sponsors today, and that is Emrit.io. When you're thinking about helium mining, this is the company to maybe take a look at because it is one thing that they're approaching, and that is the ease and process to actually start and getting going on mining. So right now, you can actually order a device, which that's probably one of the biggest things that you face right now on helium miners is the lead time to get one of the miners in and to you. With Emrit, you actually can get the miner very quickly. You order it, you can activate it, and then start mining. You go through a process of setups. I like the fact that, one, they're a helium partner, and when you look at partnerships, I think this is a key thing in any kind of project is you need that kind of solidity that kind of connects these big projects with projects like what you're seeing here with Emrit. So one-time hosting fee. This, I think, is going to really start to ramp up as we see more and more technology lean in on this, including things like 5G, a lot of IoT traffic starting to move in. So the demand for this kind of network architecture is going to be very, very serious. If you're looking at going into Emrit for Business, they can go in and start developing or work with you in developing a fleet for your businesses. So depending on how you are going about this, whether you're doing it as an individual or maybe as a business, you can look at deploying a whole layer of Emrit devices and going with this same approach. So, and you can kind of see here, there's a lot of different use cases for this, from retail franchise systems, public spaces, commercial real estate, property, utility monitoring, all sorts of things that really kind of play into the enterprise side of this. So make sure and check out Emrit.io. I want to thank them for sponsoring this episode. Let's talk about stablecoins for a second. I follow Kevin O'Leary a lot. He talks a ton about USDC and kind of the future of where stablecoins could become the core and maybe the entry point for a lot of people entering into, in general, not only DeFi, but crypto as a whole. And if you look at the regulation, whether it's Senator Lummis and Gillibrand on what their approach is, stablecoins will be a part of that. There are other bills that are being proposed here in at least the United States that are really kind of looking at regulatory guidelines for stablecoins. Now, you guys are offering some earn products, but USDC is not in that earn list yet. Is there a plan to integrate USDC as an earn product in the future?
USDC, actually, I believe USDC should be in that earn list. That's definitely, we have a partnership with Circle. It may not have been showing up depending on your jurisdiction potentially, but certainly Circle and what they've done with USDC, I think is very important for the industry. The stablecoin, I think, is just such a key piece of infrastructure for digital assets. And with what they've done by doing these voluntary monthly audits of of their reserves, I think is great. It builds a lot of confidence, and I think we see that reflected in the market cap of USDC versus USDT, for example, over the last couple of months. So the figure I have is that USDT is down $50 billion in market cap from 66 to 16 over the last 2 months, and then USDC has stayed flat and actually climbed a little bit. So I think this is, again, back to the theme. This is going to get to be a really boring conversation with me because I'm going to keep bringing up compliance and regulation, but it's this is sort of the voluntary side of that, where Circle is being proactive with regulators, and even when their guidance hasn't been put out or they don't have directives to work within, they're deciding internally, hey, the whole premise of USDC is that you have reserves to back up the coins that are issued, and we see what's happening with XRP with the regulators. We see what's happening with USDT, and so that's the direction that we choose to go. So I think it's really good to see, and like you said, it's part of the natural development of this type of technology.
Yeah, and we'll look back on this as the players versus the posers. Definitely when all of this kind of settles out and we do see a real market, if we see crypto become that 12th sector, those are the kind of scenarios that we'll have to play into it for sure. Let's get into Wonderfi Interactive. Explain to me what that is, what the service is going to offer, how will it be utilized, all that good stuff.
Absolutely. So aside from the compliance and regulatory side, I think one of the key issues we see users complaining about, talking about within digital assets is having to use so many different accounts and platforms to access the assets they want to trade, to access DeFi, to access NFTs, and so on and so forth. And so what we're doing is really creating this unified access to all these digital assets through various brands and products. So going towards a single sign-on concept, where if you have a Wonderfi account, you can access all these platforms to trade these various assets, and just making that seamless. And so with Wonderfi Interactive, we see a huge opportunity to onboard new people into the space through gaming. And Sam Bankman-Fried, who's one of our strategic investors, has put it best, which is that he believes that play to earn gaming and just games in general could onboard the next billion people into crypto and digital assets. And the basic thinking there is that you have a limited amount of people that are interested in crypto trading at this point, that are going in with that purpose and seeking out platforms like Wonderfi and BitBuy to do that. But you have a much broader base of gamers, and gaming is so congruent with a digital asset economy that you can have, for example, through a game like we offer through Wonderfi Interactive, you can play a game that you would regardless of crypto, and if you pass a level or if you reach a certain achievement, you earn an NFT, which you can then claim through your Wonderfi wallet, and then that's something that's real tangible, that has value, that you can trade and then potentially trade or swap into something like Bitcoin. So it's really just an easy on ramp for a broader base of users into the digital asset space.
Okay, so because I think from the gaming side and obviously what we see happening within the metaverse, definitely something that we'll see some massive growth in. It was a very short run for gaming companies because obviously we saw the all-time high for Bitcoin in November. Metaverse, kind of the metaverse October when Meta announced their new direction, all of a sudden brought pretty much every press and media company onto a focus of what do you mean metaverse? What's going on here? So we saw a lot of that run up, and then obviously now we've seen huge market corrections there. So the likelihood is we're going to see some big runs in this area. So I think you guys are probably in a position right now to be in a good spot for when we start to see some corrections there in the marketplace. Okay, so I want to get into the regulated and the compliant side of things, and this is something that I'm not sure everybody completely understands why we look at all of these various situations with different exchanges some in Singapore, some here in the US, some in Europe, and there's all these different rules and alignments. You guys being based in Canada, and how I guess are you being able to keep up with the compliance nature and requirements from all these countries around the world right now?
So it really comes down to having team and resources to do that. We, executive team, board, and really resourcing to be able to hire legal teams to run these regulations to ground in the various jurisdictions, ensure the products that you're offering are compliant with local laws. And so it really is it's a matter of time and resources and energy and really interest from a strategic standpoint to do that. And so I think you'll see in the industry there are companies that decide to sort of I'll say take a shortcut for lack of a better phrase. And quite often what we see is that is very beneficial from a business standpoint because it brings in new revenue streams sooner and without having to sort of comply with regulation. They're really able to kind of get a jump on things. And we've taken a different approach, which does limit some revenue streams and opportunities. For example, staking and lending through our centralized platforms, BitBuy and Coinberry. We do not offer those yet because we are
Mm-hmm.
working with the regulators to get them comfortable with how those products operate. And so for us, that limits that revenue stream, but it does give assurance to users and to investors that when we do offer it, there's not going to be a catastrophe where users are losing their funds or there's a credit issue. And I think, like for me, that's incredibly important. And I think we've seen in the news some key events that have happened recently with companies that have gone other directions, and
Yeah.
your channels covered that extremely well. Super interesting, and not to say one is right or wrong. I don't want to come off sounding like I'm on a high horse. It is definitely just a strategic decision. Our view is that in the long run, compliance is going to come in. We've seen it in so many different industries over the years, and so we're taking that sort of longer tail approach, and I think that's going to build confidence for users, and not just like I really look at this from the standpoint of, again, digital assets only serve their purpose if they're accessible to the masses. If they're just accessible by the small group of crypto traders, we've
Right.
failed horribly. And and
Yeah.
and so I think we really want to be able to do that, and then at the same time, from an investment standpoint, be able to bring in more sophisticated institutional investors. And Kevin talks about this a little bit because he comes from that world, but the mandates for a lot of these institutions really are stringent from a compliance standpoint, and so having compliant investments like Wonderfi, I think is the direction that the industry is going to go.
I want to talk about some of the features you guys offer, but also when you look at simplifying DeFi as kind of the mission here, and you think about your roadmap over the next few years, because really timing right now is everything, because we're going to be in a position where probably by next summer, we maybe are on the backside of some economic pressures and moving
Mhm.
into possibly a new market position. with that being the case, that's, you're talking about a year away. That's not a lot of runway in terms of time if you're developing new products. So with what you guys have on your roadmap right now that's public, what, in terms of simplifying DeFi, because I feel like you're right, being able to be in that spot at the right time where we see adoption entering the market and having the right product at the right time, what would be the draw in for, say, we'll call them unsophisticated crypto investors? They're just new in the market and DeFi is their first step in and they go to Wonderfi. Why would they come there a year from now?
So I think it depends on what markets you're looking at. So I think for markets like North America, for sure the draw right now, and I'm quite confident that potentially in a year as well, the draw is going to continue to be assets that you can earn interest on,
Right,
even with
yields.
the changing climate. Yeah, yields exactly, and that's really what spawned the rapid growth of the DeFi sector. So those products and having those products offered in a way that provides minimal risk to the user, I think is going to be key. Aside from all of the centralized crypto sort of blowups that we've seen lately, there's many more DeFi issues that we've seen over the year that are maybe they feel like ancient history now, but I think they're
Yeah.
they're definitely there and very real. So I think the ability to provide those types of secure offerings to people that provide moderate amounts of yield, I think are going to be important. And then in developing countries, which is a big target for us, it's really just being able to offer stable coins and being able to onboard people in a seamless way. I think there's such a
Yeah.
lack of banking infrastructure in so many developing countries that having easy access to to a platform where they can access a stable currency as opposed to their local currency, I think is very important. So at the same time that we're making a push for adoption in North America, there's some key markets that I think are equally or more important.
Well, I think you hit on it right there, as emerging markets are going to be looking for financial instruments like this. So it is something that it's a huge void in the marketplace right now. So you're right. We're in a very unique place. It'll be interesting to see how banks start to move into this space if we see some regulatory guidance, especially around stablecoins, coming into that place. Okay, so let's think, because if you think about a year from now, we're going to have the Celsius debacle behind us. But a lot of things are going to come out from that. And I think both from a news standpoint, but just in general research, investors are going to be looking at these kind of scenarios and saying, well, wait a minute, if these guys are involved in DeFi, could there be a risk here? How are you avoiding that, kind of that moniker of being in the DeFi sector without seeing some of these scenarios? Because that was really kind of Celsius's big claim to fame, is, being the unbanked. What would really
For
separate you
sure.
guys other than, the regulatory guidance that you guys are placing in the way of it?
Yeah, no, I think it's a really important question, and so for example, the difference between what was doing versus what we're doing is our platform is fully non-custodial. So when we're offering yields through the platform, it is actually just offering products like through Compound that are in the DeFi space the most tried and tested from a transaction volume
Right.
standpoint and from an audit standpoint. And so it all comes down to product selection for us, since we don't custody client assets
Hmm.
through the Wonderfi DeFi app. And so it really comes down to vetting those teams and products and really kind of going through everything from a technology standpoint to ensure that these are the safest and most secure offerings. And that's on the DeFi Wonderfi side, and then on the BitBuy and Coinberry side, which are the centralized platforms that are licensed by the regulators in Canada. I think those really, from a strategic standpoint, again, getting regulated. Like BitBuy was the first regulated marketplace in Canada, and Coinberry was the first regulated dealer platform in Canada, which is similar to the Coinbase business model. though leading with regulation basically means that every time we list a new asset or every time we look to offer a new service like staking or lending, we are going through in rigorous detail with the regulators, the processes, and making sure that everything's vetted from a technology perspective, also from a collateral perspective, and making sure that we're not getting ourselves into situations that open us up to exposure, like some of these other incidences that we're seeing. So again,
Yeah.
it what it results in is a bit of a slower level of growth for us from a product perspective, but we're confident that that is going to be beneficial in the long term because we're going to avoid we're going to be able to stay the course basically, and just
Yeah.
kind of build this confidence with users and investors over the years.
Well, I think the key here too is when you look at companies that are going, especially the non-custodial route, that in itself is a big clarity between the differences of some of these platforms that go in those directions of holding your tokens and being in a position where there is leverage and possibly exposure out there in the marketplace that can be a little bit more risky. Now, granted, in good markets, when times are up, those kind of risks are much
Yeah.
less. It's only when you see pressures like what we've seen here recently that those get exposed. I want to jump over to your website because I was looking at just the coins list
Sure.
here on the assets. So a good selection, obviously the big ones being Tether and USDC from a stable aspect. Going into the native assets, a lot of the good ones that I think are going to continue to fly along here, and really going through the process here. When you think about, I guess, not only the side of going into the individual assets itself, but also I wanted to show your indexes. So you've got the Metaverse Index, you've got the DeFi Pulse, and then the Bankless Index. Plans to add more indexes here in the future? What is going to, because I think this is probably one
Yeah.
of the best entry points for an average investor that doesn't know a lot about these projects.
I agree. I think it's definitely the best entry, arguably the best entry point. The issue with indexes right now is really liquidity around them, and so that's why we have a more limited group right now, because we don't want to be putting people into indexes that are then difficult for them to sell. But we are working with the group behind DeFi Pulse Index to develop some new index products that
Mm-hmm.
capture different sub segments of DeFi, and then also look to follow the investments and holdings of people within the Wonderfi world, like Kevin O'Leary, which I think is sort of a fun angle for us to take. But
Yeah.
I agree with you. I think that's a really first touch point for new users in the space. It's one of the best.
Yeah, it's definitely, I think, when people look at indexes, because obviously the lack of ETFs here in the US, anything that kind of help drill down into a category that's got some sort of research layers that people have kind of vetted out tokens or projects, and then balancing those into a much more, stable approach, especially from an aspect of an investment. I always say if you can get into those are the best ones to definitely do it for sure. All right, let's talk about a couple of market conditions right now. Obviously, we see Bitcoin now under 20K as we're recording this. The second time it's hit under the 20K mark. We've seen market pressures, the issue of macro becoming a big part of the market. And with all that happening here in the next, say, maybe 2 to 4 quarters, we could be seeing continued pressure, obviously, with inflation numbers. Obviously, interest rates most likely happening. Where do you guys see this going, and what would be your roadmap for being able to come out with new products in these kinds of market conditions?
I think these market conditions we've seen before in the crypto industry for sure, and then across technology, as for many many decades. What we've learned in the past is really these are great times to just focus and build, and I think that it's these types of markets definitely weed out a lot of the speculators, and not
Yeah,
that they're not welcome, but that's just naturally what happens.
sure.
And obviously the liquidity crunch is affecting the price of Bitcoin, the crypto market in general, and really kind of moving a lot of new investors out of the space. But from a building standpoint, again, it's really a great time to just focus and really realign on the mission of what you're trying to do. So that's what we're focused on, which is just to continue steady growth through the market. And we like for our company in particular, we have the staying power to last this for many years. And so we're not really thinking about the market conditions that much outside of how we can better serve users that are trading on our platforms in light of the market conditions. But from a from a strategic standpoint, we just kind of carry on and really focus and build at this time.
Heads down, as they say, when times are rough, because that's usually the place where innovation begins. So good stuff. Ben Samaroo, Chief Executive Officer over at Wonderfi. Thanks again for stopping in. We appreciate it.
Thanks so much, Paul.
Excellent. All right, you guys are tuned in over on the podcast side of things right now. This is the place to catch everything, though, is right here on the YouTube channel. Make sure and jump into the Diamond Circle when you come over here, because this is the place where, one, you can join a community. You can also get a lot of our alpha releases that we do in our emails drops to you. It's an easy thing and it's free, so just jump in there. If you guys want to reach me, it's out there on Twitter at Paul Barron. We'll catch you next time right here on TechPath.